Okay, everybody. Welcome. Happy Thursday. I'm going to get into some sobering news shortly. As is typical, you know what's close to my heart, what's happening in Ukraine. But before we get to that, we'll look at some charts. Hope everybody's doing all right on this Thursday morning. All right, 1 second. Here we go. All right. This is log scale of U.S. federal debt. Debt explodes during wars. We've talked about this. Right. Civil War, World War I, World War II. Jackson took it down to zero during the interregnum of the first and second national banks. Jackson was good on a lot of fiscal things, a little bit flawed on some other things. Nobody's perfect, but also no angels in a lot of this stuff. So, want to. Good morning, Rich. Good morning. I want to just see where we are. Everybody loves talking about how the debt bomb is going to explode, and I sympathize with a lot of that. But let's see where we are relative to the growth of the debt. All right, so if we do a trend line, which isn't great because the U.S. was experimenting with a lot of different monetary and central banking and debt arrangements in the 1800s. You can see it's kind of a wacky trend. But if we go all the way to the founding of the Fed, 1913, opened their door just before the U.S. entered World War I, you'd get this trend line. All right, so this trend line only goes to here. That's it. It's 1800 to the founding of the Fed. Not going to say much more about it. That's what it is. It's a wild history. You can read many books about it. If you take the founding of the Fed until the end of the gold standard, that is the Bretton Woods standard. All right, so I'm only going to here, 1971. Okay, obviously you're going to get big jump. But then relative to the trend, we actually fall. Okay, so again, pretty wacky. It's not like, by the way, this has nothing to do with it. Right? This trend line is I'm just projecting the green out to see where we would have been if we stayed on the 1800 level. So this has nothing to do with the debt at the time. It's just where we would have been. So we have more, right? From World War I, we go more. Although, again, we're above trend, under trend. Vietnam War actually didn't drastically increase the debt until the Vietnam War ended. All right. But clearly, the debt's growing faster. All right? And from 1971 until 2008, you get this blue line trend. All right. Faster yet. Starts out at a lower level, the trend line. But if you project it out until 2008, end of year 2008, I believe. Can't remember sometimes on my spreadsheets, but it's close enough. This is the trend. And by the way, the CAGR, all right, so notice, by the way, the R squared is the best, 97%. And the growth is the fastest, all right, 9.5% CAGR, you see in the tooltip, okay? So this is a perfect illustration of Jeffrey West's super exponential growth. We go here, 5.4% in the 1800s, then we jump up 8.2%, and then we go even faster, although we start with a lower base, but that's the math. And we're growing at 9.5% CAGR, the blue line. A little bit complicated, this one, but you can still see the treadmill that Jeffrey West talks about. Good morning, MP. Good morning. All right, so then let's go ahead and look where we are getting up till today. This is log scale, so things don't look too crazy. But I'll show you the value. 37.6 trillion, September close. 37.6 trillion. Notice something. We're actually below the 1914 trend and the 1971 trend. By quite a bit. If we had been growing the debt the way we grew it in World War I and World War II, we would theoretically be at 51 trillion. And if we grew it the way we grew it from 1971, the end of the Vietnam War, until 2008, 59 trillion, 60 trillion. Actually a good thing. And if we grow it actually what it was from 2008, there we go. This red line here, trend is even softer. 7.2% CAGR and a 98% R squared. I want to be clear. I'm not apologizing for the government. I think it's pretty bad when you have your interest payments more than your defense payments or defense budget. That's where the U.S. stands right now. But at least as a function of these trends, it's not insane. Now, of course, if we had been on the 1800 trend, we would only have 1.4 trillion in debt. That would have been great. But we're well off that. Never to come back. Never to come back. Unless we have a, full restructuring of the dollar, the debt, defaults, everything else. It's just never coming back. But this is what we've been doing for the last 100 years, is something between an 8.2 and a 9.5% CAGR, and actually lower than 8.2. Only 7.2% here. And where are we exactly relative to the 2008 trend? I mean, right on it, slightly over it. So I think about this stuff a lot when people say the dollar's going to zero tomorrow, it's over tomorrow. I think they got some runway to kick the can down the road. Let's go out to 2050. Think about how insane 37 trillion in debt is today. When, say, let's go back to, let's go back to 1980. Debt was under $1 trillion. In fact, let's find the exact. 81, doesn't matter. We hit $1 trillion in 81. So 44 years. So in 44 years, the debt has gone up 38x. It's totally possible that we stay under a dollar-based system, and by 2050, we have, at least according to the red line, 216 trillion, which is less than 10x, right? Because we're on a slower growth rate. So what is it exactly? 216 divided by 37, just rough. Only 5.8x more. 5.8 times more in the next 25 years. We'll come back to the Bitcoin stuff and everything in a second, but note how, ironically, this is a lower growth rate, even than the trend line that existed from the 70s. Good morning, Jonathan. Um, well, the U.S. did have 120% debt to GDP, or 110, uh, after World War II. I don't actually think I've charted that out. I could try to maybe do it on the fly, but um, back here, right here, when the debt was 250, 260 billion, that was running at 110% debt to GDP. So it's possible that we could come back from it again. As far as the power trend in Bitcoin, very little relationship at the moment. Okay. I'm on record many times of saying this thing, all right, is 5-10% correlated with the real economy. Take the mode off. It's a little bit. This is just doing what it is. Bitcoin's becoming adopted as it is. Yeah. What I'm trying to say, though, is, we have these ideas, right? Wall Street uses it a lot. Wall Street may be morally bankrupt and everything, but, don't fight the Fed. And you can absolutely say that this growth, because of, this faster growth in the debt over the last 110 years, has been because of, or primarily driven by, a safe, quote unquote, safe backstop from the money printer. So I talked to some CBDC people. Well, I shouldn't say that, CBDC people, but financial people in the Scandics, whether they're Bitcoiners, whether they're just kind of TradFi people. And, because of their wealth up there, they kind of just gung-ho on, it's like European style, over-regulating for over-regulated purposes. And if you have things like poverty, and you think in your society there shouldn't be poverty, there's a lot of politicians that just look at the instruments of government, i.e., creating a CBDC, printing money, social welfare payments, and they think, well, we got to get these people off the street. We got to get give them some help. Although I'm sure everybody listening to this stream understands the perverse incentives of those things. But they will do it. They'll just do it no matter what we think, what we say. Even if you get a strong, Liberty Caucus. What was the Swedish, the Pirate Party? I don't even know how they're doing these days, but you still have massive blocks of social welfare politicians and policies. It's very hard to fight. It's not good. I'm not defending any of it. But I'm just trying to think about the likelihood of this stuff continuing. Still seems pretty high. All right. Notice how, they were even doing a good job, theoretically, pre-pandemic, right? Pre-pandemic, only 23 trillion. Trump only took it from, so he came in here, January 2017, 19.9 trillion to pre-pandemic for. It's still huge, obviously. It's the power of compounding. It doesn't matter. You run this any which way. Biden, Trump, Bush, Obama, they're always going to increase the debt like in major chunks compared to any time in the prior history, especially when you had a history that actually paid it off completely back here. Anyway, I don't want to spend too much time on it, but would you be surprised if I told you that the growth of the debt in the United States from 2008 is lower than basically the entire 100 years before it? I was surprised first time I drew this. Good question. I want to. Yeah, I do. I'm still working on my back end, so to speak, experimenting with different AIs to help me organize it better. Because you're pulling in all this different data, right? Like World Bank, IMF, Bank for International Settlements. Population will still grow on a global level in exponential fashion, but it's a slower exponential fashion than before. But it's still like exponential, whether you call it 1% a year, 1.4% a year, or something like it is now. It's not 2%. It's falling, but it's not. It's not growing in power. Cities grow in power, but not nation states nor the globe. So exponential trends are very volatile. But I want to get there. I really do. Yeah, great question. Especially considering this. I mean, it's hard for me to see, at least in the next 10 years, us moving to like a Bitcoin standard. Could be wrong. More people consider still spending that ever devaluing fiat while they're holding Bitcoin. To save against the erosion of their purchasing power and their inflation. Good morning, Nancy. Yeah, I mean, I don't want to rehash too much of what I just said, but I would say low likelihood, particularly if you're the United States. That would be, if the United States defaults or restructures, that's an explicit acknowledgement that their dollar hegemony is over. Hegemony, as the dollar hegemon is over, and they certainly don't want to give that up. They'd rather do it like Trump wants to do and lower interest rates, print a little bit more, take a little bit more of the debt, and continue on. Should have queued it up, but I'll pull up the old CB versus Gov debt chart. All right, you guys know this, but I'm pulling it up. So I would say low probability. If you're the United States, if you're some other sort of less powerful country, there are higher likelihoods, but still pretty low. So here's the old, you guys have seen this, right? Same chart, debt on linear scale now. Civil War, big bump. World War I, big bump. But remember, contrary to popular belief, the Fed was not doing much in World War II. Here's how much they owned as a percentage of the total debt in World War II. 1%. Not much. During the Great Depression, they started to change things. So, and they always like to say this was practice at the beginning, but they're never going to admit their mistakes. But you can see basically from the Great Depression, we go into an era where they even tried to change it after World War II, but went down to 3.4% of the debt. But since then, at least 8%, they've owned it, except for the very start of the GFC. And then here, when the Vietnam War ended, and they got to 18% of the debt. That is Fed printing 18% of the debt. That's what this means. The only reason this percentage comes down is because the debt grows even faster. All right, so going back here, 1971, look at this blue trend line. Debt starts to grow even faster after we move from the gold to the dollar, full dollar standard. So that's why you get this actually looking a little bit better. You can see this bank button icon moving even faster. And then everybody knows or sort of has an idea what happened here. This is the bailout of Wall Street. They swapped out bonds with corporate paper. It's a temporary thing. Once they put all the backstops and the guarantees in, they switched it back and they took more government debt on. And here's your QE 1, 2, 3. But this is them bailing out Wall Street basically right here. But then, you know, here we go. During the pandemic, they got to a max of 28%. So 28 cents on every dollar that the Treasury issued was owned by the Fed. That was a max. And they have room to pump it again. Donald Trump wants this higher. So it's good. They're going to get it. So I'm much more of the opinion that it's a status quo thing. I mean, look, I started my Austrian economics or free market journey here. It feels like, I don't know about you guys, but it's just, time flies. I remember very well these days. Very low likelihood, in my opinion, that they come to terms with an actual default. And they have room. So, again, just a lesson in sort of longer term thinking. I try to, do it myself. I should number these instead of all having a play button, so you see. But it's growing not that fast compared to the past. Only doubling every 10 years. Only at the moment. Absolutely, it will be. Everybody that's watching this and understands anything about the power curve and understands anything more importantly about Bitcoin is setting their families up very, very well. Yeah, it does. It really does. And it will. It will. I think, I haven't charted this, but you can imagine the Bank of Zimbabwe buying up the Zimbabwe treasuries, whatever they're actually called in the native currency or native language, like 100%. It's like they're not buying gold or anything; they're buying the debt of the government. So this line gets to 100%, right? 100 cents on the dollar of debt printed is, 100 cents on the dollar of the debt issued becomes absorbed by the central bank, and then the confidence is lost. But think about all the newsletters, think about all the doom and gloom, and there's a lot of doom these days, but Powell did what he promised. He actually did. I mean, to some extent, right? Higher interest rates for the dollar, lower purchases of bonds, or more importantly, or more accurately, letting the bonds expire. That's here the whale. The whale goes down. not buying new bonds. So it's going to be interesting. Now stocks look much more. So here's the stock market. I've shown this before, but just to show you again. This looks much more like the Jeffrey West stair step. So we're on a 2% CAGR, then we moved to a 4.8%, then a 9.6%, and now we're at 11.6% CAGR. So the stock market literally has grown faster and faster and faster with each monetary epoch that we've been in. Look at how the Great Depression just slices through that black line. It'd be devastating if we had this again. 29 to 4. Bitcoin has this every 4 years. this sort of a drop. But from October 29 to July 1932. Pretty wild. And another thing is, I think we're in a different world even from here. So let's take off the 1971. Let's take off just this. This is, I think this trend line, the fastest trend line, right? Growing at 11.6% CAGR. So I even forget why I did this, but yeah, I think officially it started in August. I thought it actually started in 2007, but whatever. I started it in August for some reason, August 08, to catch for sure the next full year. So this is my switch. You know, everybody knows. It's like that Steven Pinker book, right? Everybody knows that I know that you know that I know that you know. Everybody knows that the Fed's just not going to let another crash happen again. Like, see what they did during the pandemic, right? Here, what a small blip before an explosion of liquidity. Do you guys think it's going to be like 1929 style again? I don't know. It seems like everybody knows they're never going to allow that to happen again. So this black line would be if we stayed from the 1914 to 1971 trend. Yep. I can find my, I think it's over 40, it's definitely over 40%. I'll just tell you. The lira has been growing at 56.9% as of June. That's an annualized rate. 30%, June 2024 to June 2025. And if you took the 1980 to June 2025, compound growth, it would be 47.7%. So definitely agree with that. Yes, it is. Good morning, Gio. It's very hard for me to imagine that, you know, that they shut any of this down, right? Stable coins are going to come. Like, you guys tell me, when is this green line going to just go to zero and turn into Bitcoins? I would like it to happen, but this is the stock market. Let's look at the debt market. Make that sense. That question would be better. When is this green line, this green shaded area, going to just turn into Bitcoins? Also, I don't like those, I think it's fiat. Is it fiatmarketcap.com where they just take random money supplies and they divide them by 21 million? That doesn't make any sense. So here you would get like 37 divided by 2 roughly times 21 million. So it'd be something like 388 million Bitcoin. That doesn't make any sense. If you follow what I just did there, it's the market cap of this divided by the market cap of Bitcoin times 21 million. It doesn't make any sense. I think the dollar denominated world will be here for a while, as much as I'm not a fan of the craziness. Just gonna keep, I mean, who's gonna stop this trend? Also, huge point. That is the deal. Yeah. Let me show you the old. So to be clear, when I extend out the curves on this chart, I go according to this trend line, and basically every trend line from when Bitcoin started. I think it's slightly different, so we can check it. Kager is the same, but here's the treasuries. It's federal debt. See 7.5% Kager, and then here you see 7.2% Kager. It's interesting, slight difference. It's because I started this. You'd actually think that'd be faster, but this starts here in August, and this starts in December. Surprisingly, it's slightly faster, which surprises me, but that's what it is. Doesn't matter. It's the same type of thing. So here we go, right? We moved from 37.3 onto the trend, which is basically that's the reason. Somehow, sorry, let me fix this. And I'll show you the one second. Did I block this at some date? No. Why would that? Hold on, just give me 1 second. 37.6. Oh no, it's wait, 37.3. What does it say? It's moving into. Let me reset this. Should be right. Sorry, I hate doing this stuff on the fly, but there. No, 37 point. What the F? No, there it is. This is correct. Sorry. There it is. 37.36. It's the same numbers. Just checking myself. So you guys know I'm not fooling you around. All right, so here's the slope from December 2000, the regression from December 2008, and this starts in August. Just I'm trying to be fancy with the cycles, but whatever. All right, so here we go. Let's see how fast Bitcoin catches it on the power curve. All right, like most things, 2040, 2040-ish, 2041. Your guess is as good as mine when we, it's 100 trillion now in US Treasuries when we match it. Assuming we stay on this trend line, right? Assuming we stay on this red trend line, which is a pretty good fit. 96% R, 98% R squared. Pretty amazing fit. Are we still in a dollar world even here? Because remember, matching it or overtaking it doesn't mean the other thing went away. Right? The Treasury could still be stupid at this time and like only hold some gold and only hold US Treasuries. Maybe they never really bought Bitcoin. By the way, if they buy Bitcoin, I would expect us to pass this sooner. But regardless, the point stands. When you're at 100 trillion Bitcoin valuation and 100 trillion in US federal debt, those can be completely mutually exclusive buckets of value. So we could go a long way with the dollar system. They got the guns. They got the power. Yeah. Yeah. I'm old enough to remember when you could just walk into a bank account you walk into a bank and sign up for an account with your ID or even with your parents without an ID. Maybe I had the driver's license, regardless. It's going to be a big fight. Are you of the opinion that the tariffs are a good idea to bring this realization home? Also, they need to start producing ships. You can't just buy all your aircraft carriers from China now. So nothing changes on the thesis. These are very strong R squareds, very strong curves. The world growing in exponential, Bitcoin growing in power. Nothing changes. And all-time highs are meant to be broken, right? It took us, 35 years, really 40 years, to get back above this percentage, 17, 18% of the Fed holding debt. It took 35 years, 37 years, whatever, 30, 35 years. And then it only took, a few more years to do it again and again. It's going to happen again. No question. No question. Yeah, I got to get the 10 percentile gold chart up for you guys. But this really does tell the whole story in my mind, that expo chart that I showed you yesterday. I mean, someone's gotta come to me with the thesis that like changes the entire structure here. Like this is, yes, it could be like here, right? Where we go a couple years pulling this red line higher. See, we're at it, so we could pull it higher. But doesn't seem like by much. Maybe another double max, which is great if you're holding gold. Enjoy it. But the structural trend of gold versus the dollar is like this is the long-term trend. And by the way, the slope of this black line is I think a 5.5% CAGR. I always forget my different CAGRs. I need to put them on the chart. Hold on. Need to put them on the chart. It's 5.2. $5.2, 5.18%. I need to put that on the chart. Whatever. I'll do it later. I mean, it would have sucked to live through this as a gold bug. 20 years. And then Gordon Brown sells most of the UK's gold right there. Calling the bottom. No, it's really not. 5.2%. I mean, that's what I'm saying. Like maybe you get a massive run and this pulls it to like 6%, 6% CAGR, but it's not much. And by the way, everybody, I've said this before, but everybody in the gold world does a quick PV, FV divided by PV calculation where your PV is here, or rather even $35 an ounce when really it was 41 at the time. So $35 an ounce to 4,115 bucks an ounce over 54 years, and you'll get a higher number. But that's cherry picking. It's cherry picking. You can't pick here and then sell here. You'll get like maybe 9%. I don't know what it is at the moment. I'll do it for you. I'll do it. Right. Let's just say 55 years for the fun of it. Let's say 41, and then what is it, 4,100? You get 8.7. 8.7. So a lot of the gold industry will say that gold has grown at 8.7%. It's not true. You got to account for this spike, this massive decline, and then this spike, then this sideways movement. You got to measure this, not cherry pick anything here. And it's amazing to me how the financial world like just does not understand regressions. Like this is a core part of my philosophy, right? Let's get a trend. Good morning, Few. Like that name. I think it's close to topping. I mean, it could double. It could absolutely double, but the structural trend is not that exciting at all. Nor does I think gold offer anything that Bitcoin couldn't. 5.2% per year. That's what this black line does. So yeah, if you were a gold bug right back here, if you still have gold, you know, if you're a boomer, forgive me. If you have gold from the 60s and 70s and you held it till here, yeah, you would have gotten like close to 9%. 8.73%. But that's not most of the market. And I just don't think it's that indicative of what the market's going to do. This is the market. Is that a ChatGPT? 58% is right on global foreign exchange reserves. I did not know about the 88% of global foreign exchange transactions, but 58% is absolutely correct on the global foreign exchange reserves. Yeah, 100%. I mean, this rip that gold has done in the last 2 years from the trend line, like kudos to anybody who's holding gold. But I talked about this yesterday a lot, right? Like, be careful because, Bitcoin is on a much stronger trend. And you are, Bitcoin is halfway undervalued to the trend in terms of gold. So you gold bug, I would take advantage of that. Peter Schiff, I'll show you right here. Because if you don't, and it goes back to the trend, you might not get 25 or 30 ounces of gold per one Bitcoin, but you might go back to 60. 60 is the trend. I'll show you. All right. Like, the gold market is loving this. But this is so low. I'm not giving up on the gold power law trend at all. I mean, look at this trend line. It's still a 95% R squared. Yes, it's a little bit worse than dollars, but in my opinion, this is going, this green line is going back to the regression line because it's so low right now. You're in the 20th percentile on price, which is 26 ounces, 27 ounces per Bitcoin. I mean, the best we got was back here in the recent days, right? We talked about this, 9 ounces, 10 ounces. That was 2 years ago. And by the way, it still would have been better, right? So that's another thing to keep in mind. So you would think, oh, great. In 2022, gold was only $1,700. Now it's $4,000. Actually, in terms of Bitcoin, you're still worse. In 2022, you should have swapped in immediately, because then you would have had only cost you 9 ounces of gold per one Bitcoin. Now it still costs you 26. That's 2.5 times more, right? 3 times more. So, and you got to go back to 2017. It was 1-to-1. These ratios are never coming back. These prices. So, Peter Schiff hates this chart still. Even though gold's looking good, you're still worse than when Peter Zion said Bitcoin was $17,000 overvalued at $16,000 Bitcoin. It is crazy. It's going to be super exciting this fall. I know I keep saying it. Here's APSK, my buddy. Great dude, great charter. He's got his own Bitcoin power curve, fear and greed index. This is on gold, right? Same chart. Look at that in his view. So he's just basing it on the power curve. He takes the power curve and then shifts it down, I don't know, to 0.05 or something to give you a nice base. And then he just judges everything from there. You can do whatever you want. Mine's slightly different, but so if you do it this way, like we're literally been hanging out at the bottom for this long. Extreme fear. But that's when you buy. I mean, Bitcoin. That's when, when blood in the streets, that's when you buy. But I can't emphasize this enough. The price of gold, the price of Bitcoin in gold terms is still 3 times worse than it was in 2022 when the dollar price of gold was normal, right? Because Bitcoin's done much better than gold since then. So the dollar price of gold in 2022 was right on trend, $1,500-$1,600 an ounce. So Bitcoin wins on all fronts. Saylor was correct. Yep. Someone said that. You mentioned that too, didn't you? I mean, these digital asset treasuries are going to have a hard go. So remember here, this is something like 15x. So the stock market right now is close to a bad number, 6688. You project out on this trend, it's 7. All right, here will be 10x right there, 2047. So you already get to like 15x, three more years later. But this will go 10x in 23 years, 22 years. Right? Stock market goes 10x in 22 years at an 11.6% CAGR. That's the best looking CAGR of all the CAGRs that I've shown you, right? So here's where is it? Right? This only doubles every 10 years. And that means I don't think we can get 10x at all here, right? Yeah. So this won't even 10x by 2050. This would take a bit longer. I can't do it in my head, but point is Bitcoin beats all of them. I need to get the S&P market cap. I don't have that. But that would be cool to put on this chart, is the S&P market cap. Actually, I do have the worldwide. The worldwide market cap is even better. Remember? We've shown you guys this. Global balance sheet. Assets are positive, liabilities are negative. But let's just keep in mind here. Forget this stuff right now. This is worldwide stock markets. I know it's negative, but it's because it's liabilities. Liabilities are negative here, and assets are positive. But in any event, all right. So we went from 69 to 34, fell in half basically. GFC, and now we're 4x higher. So 127 trillion. That's the number I need to regress for you. We'll start here, right? So we get all this cheddar, this revaluation, and then see how fast it will grow. Bitcoin will still pass it, within the next 30 years, by 25. Yeah, good point, man. Good point. There's new gold and new silver, too. So the point is 127, 128 trillion. I don't know how fast that's growing. But if we go back to this chart, it'll probably pass it, I don't know, like here. Because remember, that's 4 times higher than this green, the stock market. And by the way, do I think Bitcoin will pass the value of all stocks in the world? Probably not. So this is more just an academic idea. And at some point, we will settle in that Bitcoin standard. But I think we got plenty of time. So in the meantime, let's play this. This is in terms of gold. Let's do it in terms of dollars. If I could find it, here we go. Right on trend, trending cheaper. Very soft. But your TA analysts are missing the point. They're going to show you wacky charts. The best signal is here. You know, stick with me when this happens again. This is when you go ultra long calls, completely unhedged, long. Nothing better than this if you got cash. Almost a 10 percentile event. And then if we get up to the 90 percentile on the top, or even the 80th, you might want to think about a different strategy. Here's the end of next year. Assuming we stay on the power law, right? And we don't have a huge boom or bust. This is the end of 2026. 60% of the time, majority of the time, 2/3 of the time, you got something like this. %. The probability of that not happening is so low. I can't tell you how low. The probability of that not happening is so high. The probability of gold going even 10x is so low. So look, like assuming it's here. Let's say 1600 is our base. 1600. Let's go out here to 2030. What is the 97.5 percentile? $5,000. It's not the asset you want to be in. Not financial advice. Yep. I agree with you. You guys got anything else? I'm excited. I got a lot of back-end work to actually do, focusing a lot on this database, but I think I'll get some. Well, I don't want to keep promising when the new data will come, but soon enough. Next couple weeks. But I got to keep working. Did you guys see that Trump backed out of his meeting with Putin in Hungary? I think that's a very good sign. it is a it is a generational thing, no question. I remember talking to Brian Kelly from CNBC 8 years ago now on our old podcast. I mean, same podcast, but with my old co-host. And he said the same thing. I mean, he was talking to Schiller, um, Robert Schiller, right, from Yale, from the Case-Shiller Index, and he debated him back in 2017. And the old guard just does not, they don't understand Bitcoin, they don't understand UTXOs, they don't understand the value. They're just not going to get it, unfortunately. I mean, some do. Some are ready to go for it, you know, even if they don't understand every nook and cranny of the code. But it's so generational for somebody. This is a good chart of it. We will win. We will win. This will be very interesting, though, by the end of the year, guys. Not financial advice, but I have a very hard time. And again, say it even does fall to the 1, all right, by the end of the year. Say it falls to the 1. What does the 1 tell us? A 10 percentile event. Still 23 ounces of gold. All right. I mean, I guess it could fall to the 1 tomorrow, then 21 ounces of gold. It's super cheap. Bitcoin is super cheap right now based on the trend in terms of gold. Dare I say we don't get back to a 9 ounce of gold per 1 Bitcoin price. Dare I say it doesn't happen. As I said yesterday, I don't make any bold predictions. I'm not going to eat my hat or anything, but these are the probabilities. Yeah, so he did put sanctions on, which was the first time. First time. Wait, remind me, why would it bring the price of oil up? I want to show a couple things, though. Because when I was in LA, I like to poke and prod about what people understand about geopolitics, and especially in my part of the world. And even though everybody's a Bitcoin fanatic, and like I am, there's an inherent bias, particularly for Americans, to do a contrarian, screw the US government, this time will be different. I'm trying to show you statistically that's even a challenge, right? We see the trends. I'm not saying I'm a fan of big debt or whatever. What do you mean 9 to 1? On the price of gold getting to 38K? Yeah. I mean, 38K for gold, there's not even any precedent. I guess we can see here, like, look at the red. All right, so the red here is 917. And by the end of 3 years, 4 years of this, it doesn't even double. It doesn't even double of being pulled up. So if that happens again, and we are above the red, we're above 2 sigma here. If that happens again, a doubling is $8,000. A doubling, I think, could happen. It's not guaranteed to happen. But at this point, you're so far outside of the norm of basically this is the only time gold is traded freely in history, right? It's always been pegged to a sovereign's currency. So I don't see the data supporting that sort of a value. 38K. It seems insane. But if you push and prod, so going back to the conference, and again, I enjoyed every time I like talking to Americans about Bitcoin and then pushing them a little bit on foreign policy. But Trump was going to meet with his buddy Orban and Putin, who he wants to be his buddy in Budapest, backed out, right, because he realized Putin was just going to make him look foolish again. And then Putin decides to bomb a kindergarten. All clear messages, right? I know a full family died here. Some kids died. Standard stuff. And then you have here, if you guys don't follow Michael Weiss, he's a wonderful reporter, both on the Middle East and in Russia. And this is literally what this woman says, this Belova, like brazenly and on camera. They say that they kidnap children and they re-educate them. She said that this child did not want to be. He was singing Ukrainian songs. If you haven't seen this news, it's incredible. It's just incredible. Brazenly and on camera, they will say that they kidnap children and brainwash them, turn them into Russians. It's pure genocide. And I don't know if you guys follow chess, but this happened. I just watched this morning. I'm not a huge chess fan, but this guy was so awesome. Danya Naroditsky, as you guys, I'm sure, know if you follow, died unexpectedly. There are some speculations of how or why, but what was clear, and this is already a year ago, is he was being bullied online for at least over a year by the former world champion and Russian Vladimir Kramnik. This is just how they are, guys. They are, if you don't understand this by now, kindergartens, children, genociding. And actually, I mean, Kramnik, I think, lives in Switzerland, but he's born in the Soviet system. There is a sadistic quality to it. Something that just does not exist in the West. So I'll keep calling it out. I'm amazed that people are so blind to it still in the U.S. So they give you some whataboutism, like it's, George Bush caused all these problems. Not a fan of George Bush one bit. By the way, he said the Iraq War was a mistake. He should have, someone should have gotten to him sooner. But they don't care. Russians don't care anything. They seem to want the worst for people. That's why they murder people with polonium. So this is actually part of my worldview. I mean, they're not gonna follow any international law. It's terrible. It's terrible what happened to this person. Yeah. Kramnik, yeah. So if you just push the veneer, especially talking to Americans, like it was amazing. I would agree with, and by the way, 99% of the people I agree with, but on Bitcoin or any other geopolitics, but people saying that NATO somehow put nuclear weapons on Russia's border. That hasn't happened since Turkey in the 60s. It's a lot of whataboutism. But I would, again, without knowing a lot of the situation, I would go back to a lot of Soviet style here. Kremnik, the bully, was a product of an insane Soviet system. This is insanity. Yeah. I mean, I can only give you my opinion. Not breaking any news on this channel other than some charts, but I understand. That's what I'm just trying to convey is when I was speaking at this conference in LA, like we're all agreeing on Bitcoin and stuff, but then you just ask a couple other questions, try to fill in a couple of dots, and you realize people actually don't know what they're talking about. They're just repeating a point that is not even relevant. So I think it bolsters what we're saying here. I mean, I know there's a large strain of sort of anti-interventionist now on Twitter and whatnot, but that's not how China is. China's not anti-interventionist. That's not how Russia is. And I think at the end of the day, it's not how America is going to be. Whether you like it or not, they're going to keep the debt cycle going. Super sad, though. All of this is so sad. I think I'm at my limit for today, guys. Unless anybody has anything else. This will be really interesting to see what happens by the end of the year, especially if we get a dollar Bitcoin pump. Thank you, few. I think with that, I'm gonna cut it for today, guys. So, good luck, everybody. Have a good Thursday. Be safe, and I'll see you tomorrow. Thank you, Daniel.